All right, I'm going to go fast, so take notes. This was Friday, December 26th. The market opened above the 20 SMA, so we had an upside down open, so I didn't take this fair value gap. Instead, I drew my trend line and I waited for 20 minutes. And you want to just wait for a break of the trend in your first fair value gap. So sure enough, here we have a fair value gap right there. This fair value gap was inverted, so I'm looking for a nice ICT silver bullet as well. This fair value gap right here, inverted, market structure shift, this line, these three candles that I'm circling right now shows the fair value gap. I entered for a short right there, 4 contracts, and added one more right inside that gap for a total of 5. Took profit on my 4, let my runner run. This was pre-market, so I knew we broke pre-market highs. Liquidity grab up there. Here's a screenshot that shows pre-market high at 7:45, and at 8:30 we shot down, came up, and this is the liquidity sweep right here. This little red candle broke above pre-market highs, swept liquidity, and came back down. Now, we don't take a trade on none of these candles, not unless we break this market structure shift. The bottom of this wick, see this big wick here on the green bar, it pushed up. That's the last place that the Green Army was defending strong. They see what you have to understand is this thin line bar means sellers came rushing in. The Red Army came rushing in, wanting to take price all the way down to enemy territory. But guess what? The Red Army got pushed back. Get back, right? So this strong push means a strong defense of this line. So once this line, this level is broken with a fair value gap, the Green Army has been weakened. They're not strong enough to hold. What happened? The Red Army came huge flush. Boom, look at that big red candle. So I jumped in on side of the Red Army. Since the market structure shift got broken, these little guys right here that tried to hold it down for the green team, they got destroyed. Once they get destroyed, I know the momentum. This fair value gap shows me that there's momentum, huge selling pressure. I'm ready to get in, fair value gap. I entered right here. I added on this pullback into the fair value gap, take profit down here. It went up, got in for another sell, and took profit again. Let's take a look. In the weeds here, we knew that there was a sniper on the green team. Right there was a fair value gap right down here. So I wanted to see if we were going to bounce from there or not. That's why I took profit right there. But since we blew past it, then I was looking for another short off of the bear flag. So what I did was kind of just drew my line here. I kind of waited here. And I saw that, we hadn't broke above the 20 SMA yet and closed above. So we're still good for the shorts. I'm also looking at a fair value gap that was created right here. So I'm looking to add again and get back into this play right in this zone right here for a break of the bear flag. Because again, my signal of confirmation was that green fair value gap soldier got taken out. So I'm looking that it's going to break to new lows and at least sweep this line right here. So I figured it would at least sweep that. And then As you can see, we got in for a short, took some profit here. It came down, swept the line, and made a new fair value gap, showing strength. And that's my runner right there. My last runner got taken out once we broke the 20 SMA. So once I saw this, once I saw that I knew we'd be in a new trend, right? Because this fair value gap shows strength. Sorry, folks. That fair value gap shows strength. I didn't take this trade. I could have, because it was counter trend and we had VWAP right here. I knew we'd get a big VWAP projection. So I passed on it and just waited for a break of this overall trend, for this overall down trend. So sure enough, we got a fair value gap right there. I entered. Well, I only entered for 2 micros. I thought I can get another 2 once it came into the fair value gap, but I didn't. But that's okay. Bear flag, fair value gap, break of the trend. You enter, took profit, got stopped out on my runner for pretty much break even. And then rinse and repeat. Draw another trend line and just wait. So I got my fair value gap. I got the break of the trend. It was like maybe what, 20 minutes or so, 40 minutes actually. Went in short, took profit, and oops. So $559 for the day. Let's take a look at the next slide, October 21st. Now, as we zoom in, you'll see real close right here. The top of this swing is what we call the market structure shift. That's the last place that the Red Army was trying to defend. You can see they pushed this green candle down. That's the Red Army saying, get back. We're trying to defend this line. They crossed into enemy's territory, breaking into the pre-market low. The Green Army called for reinforcements. How do you know there's reinforcements? Fair value gap right here. Once you see this first fair value gap, now you know Green Army has reinforcements. There's going to be momentum. But you still don't take a trade until they break the market structure shift. So we wait. This gives us a clue. Breaks the market structure shift. Now you know the Green Army is in control. And where are they going? They want to break the enemy's territory. They want to go into enemy lines. This is enemy territory. That's the red zone. Sellers have been defending this, defending it. They broke into behind the green zone. So the green team says, come on, folks. Let's go and break into their territory. So what we do as traders, we jump ship. We choose the side that's winning for that moment, for the next 20 minutes. How do we know to join forces with the green team? This fair value gap right here, market structure shift after a liquidity sweep. Again, pre-market lows drawn, liquidity sweep, nice little bear trap. Shoots back up, new fair value gap is formed, market structure shift, another fair value gap right here. That's where we place our entry, our stop losses before this candle, underneath these two. So we have two small fair value gaps. Our stop loss is here. And we're looking for a touchdown. We're going for the end zone. The end zone is the territory that the Red Army was defending. That's where you take your profit. It's repeatable. It's mechanical. And if you just stay disciplined, you'll make money. Entertainment purposes only, of course. This is not financial education. God bless.